to absorb and use. I'm gonna try to be as simple as I can. Now the thing is, when you're using specific indicators and some candlestick tools, you need to have in mind that not all of the brokers out there or platforms out there provide those. That's why we have chosen one of our leading brokers in our list, which is Jeff Markets, and we like to thank Jeff Markets for providing this valuable tool for us to use, and for sponsoring that the webinar that we do today. You can find them here. After the webinar, you have going to present it with a small gift from us, which includes some bonuses, and one of the customer team will contact you for further details. So for the people that they have not attended to the webinar, they're gonna be having the webinar in recording, and also for the people that are attending, also we will have the webinar in a recording mode, so you can check it out later. So for the time being, I will start with some of the tools that we're gonna use, and after that we will go straight to the strategy. Now we are using basically the moving average. For those that you don't know what the moving average basically is, a technical tool that smooth out the data by creating an update price, an update average price. Mainly the types we use are the exponential, the EMAs, the SMAs. They are type of specific moving average that we use to plot the average price. You don't need to worry about that. It's something that is very easily for you to understand, and it's not that hard to implement as well, but you don't need to know all the technicalities. For the time being, we're going to use a specific indicator that GF Market is providing through the platform, and you don't need to know anything else related to the averages. So the usage of the moving average, basically it's when the prices is moving above the specific average, you typically tend to go towards to the buy mode, and when it's going below, typically you go on sell mode. So in essence, when the prices crosses to the upside, you will tend to buy, and when the prices tend to go to the downside, you tend to sell. That's one of the filters that we're gonna use. Now to further enhance our strategy, obviously we're not only going to use the SMAs, the EMAs, or whatever average we're gonna use. We are going to be accompanied also with the Fibonacci retracement. So the Fibonacci retracement, in essence, is a tool that uses a sequence of number, which is the sum of the two preceding ones. Mainly we use 38%, the 61%, the 75%, and so forth, the 50%. Basically what that does is when the currency pair retracement means that prices went down and then it retraces a little bit to the upside in this example. Okay, for example, if the prices move down, the retracement, the breathing that the price is taking is the retracement. Okay, and the retracement has a specific set of numbers that is typically follows. That they are either the support of the resistances, and the support of the resistances you can obviously with the Fibonacci have a better positioning, because it uses a set of key ratios mathematically calculated, so you can have more accuracy on the retracement based on those support and resistance levels. So we're gonna plot also the Fibonacci retracement in our charts for you to see what are the support and resistances, and take the necessary decision upon those. Now, to further clarify the trend line now, and knowing when the market is declining or it's rising, we will use another filter which called Fibonacci candlesticks. Fibonacci candlesticks basically are used to smooth out the price action and make it easier to spot the trend lines in between the specific trend that you are following. And let me elaborate a little bit, because Haganashi basically are a very powerful tool, and in this platform, in the market, we have the easiest way to provide the filter on our platform. It's very easy. It's much easier from other platforms to use. You don't need to install anything. It's just on the platform by itself by default. So if you come here to the candlesticks, now you use the traditional Japanese candlesticks. If you go below, you will see among others Haganashi. If you press Haganashi, you're gonna see how much clearer the price action will look like now. You see, boom. Now the price action is completely changed in regards to the filter that we apply. You can clearly see the downtrends, the range, downtrends, the uptrends, and so forth. The inside trends are plotted in much easier way, and you can easily identify where the market is going. Okay, so that's the first filter. Now let's go and put some indicators on. We're gonna use the moving average. Let's go with the moving average, which is a simple one. Double click means that I put it two times. We're gonna use the first one. We're gonna change the length because it's gonna go to 200. The style will be a little bit more thicker, so you can identify it easier. Let's go to the second one. The second one, we're gonna change the color a little bit, and we're gonna use the 51, which are basically the standard ones. So as we mentioned before, every time you see the price crossing the moving average, you are going to consider of buying, and when the price moves lower of the moving average, you will consider to sell. Obviously you can use also the crossover of the two, but for now we're gonna use the price action crossing the moving averages. Okay, let's take an example now, because we need also to plot the Fibonacci retracements, so to be sure that everything is fine. So for that case, let's say that we would like to see the downside, okay, but you don't know where the market should go. Okay, you don't know. I mean, you don't have any indication after this side here. So what you can do, you can come here, you can take your Fibonacci retracement, you can plot it from here up to the point that you knew the price was. So let's say that you saw only this one here. Okay, so you just basically took the highest price to the lowest price that you have identified until now, and now you're waiting to see the retracement in which level you can pretty much sell. Okay, and let's take it easy. Let's go. The first level is the 0.2, which, as you can see, is expected exactly that level of Fibonacci. Basically, the market came all the way down, retrace on the specific level, as you can see, of the Fibonacci retracement, and then the price went down. So you could easily put a pending position here, pending sell position, okay, and you could easily take from here up all the way down, wherever you want to have your take profit. That's up to you. Typically, the stop losses in these strategies tends to be above any of these level of retracement. Okay, so maybe you could go here and say, to be on the safe side, and use the 2-to-1 ratio, 3-to-1 ratio to take a profit. Okay, so normally we tend to put the stop losses above the levels that the Fibonacci retracement indicates. Okay, so that's what's the first example. I will not know where my take profits would be, because pretty much all traders out there have different strategies of acquiring their profits, but that's something that you need to pretty much identify by yourself, by your trading style, and by your needs. So for now, that is the first example. And if you see, it was another time here, the second time, that the price pretty much touches again the same level in this case here. But let's move to the second example, just to identify different levels. Let's take this level here. Now we're looking for again a downtrend now. Okay, so let's identify another level here. So if I take the highest to the lowest that I had identified at that time, and usually when you use Fibonacci, you wait for the first candle of the opposite side to state that the price may be start retracing. So from that level to that level, you can see that the 70.6%. So yeah, 70.6% of the Fibonacci retracement was halting the price and was in the area again of resistance between the two of the moving averages. So you can see now that it's identified pretty much the same level. You see that the price went down, respect the same level, and if you continue to do that, if you continue to follow the trend, take the highest to the lowest at that time, you could see that Fibonacci retracement is consistent. Always, more of the, not always, basically most of the time, you can see that the resistances, in this case, some other times will be support, are respected. Every single time that I'm taking my Fibonacci retracement and plot it to the specific thing, it taking the same levels. You can see again 70.6 and go forth, so forth. Now the time that will break those levels, you don't touch the trade, or if you are already in the trade, you just go out, okay, because you never know, and it doesn't matter if the price would go down again. You have to be sure that you respect the laws of this specific strategy, the guidelines. So let's take another example. You see again here between the 61.8 and 50%, boom, down. Okay, and now we are talking only for the downtrend now, because the market, according to the moving average, is moving to the downside. Even if it retraces here, you could see that again when the price came back to the levels that I wanted, even this small movement, which you consider to be in a range, boom, the 23%. I mean, it's pretty much very good strategy. And as you can see here now, if you take the long-term one, which is more valid, you could see from this leg here up to this leg down to the downside, you could see again that 0.38% of the Fibonacci halted the price with the help of the 200 moving average, which is considered to be a very powerful signal right now, and it's developing as we speak. And I think this one will also probably will deliver in the future. So as you can see, the strategy is very easy. It's nothing fancy. It's nothing complicated. You could easily implement it by yourself. And if you use GF Market, it will be much easier for you to get your head around it, because the tools are very easily to implement it. Let's take another one to the upside this time, which is the opposite, and we close with that. So as you can see, if you can take this one, the small leg here is 23, you take the big one, again it's going back to the 50%, and those are the supports now, bam, support, and going. And if I continue to take smaller portions of the retracement, you can see up to this point, maybe you didn't have any retracement, up to this point you didn't have any trend, so it's continued to go up, and then it's falling to the downside. Obviously you need practice, so you have to consider making some practice yourself, open at least some accounts, demo accounts or whatever you like, and just practice a little bit, and then you could apply to the real market. Now like we mentioned before, probably you're gonna get some follow-ups with the strategy, and if you need any help, obviously you can contact the support. Someone will contact you anyway and give you a heads up related to this strategy. Now at this point, I would like to thank everyone for attending this webinar, and I will see you in the inside, guys. Thank you very much. Bye bye.